Happy days. How's it going, people? Welcome back to another episode of the Here's the Craic podcast. Today we're joined in the studio by Aaron McElhinney. How's it going?
Not so bad.
Now, Aaron, I'm going to leave the explanation as to who you are and what you do over to you.
Okay.
So for people listening, who are you and what is it you do?
So my name's Aaron McElhinney and I am the owner of Smart Mortgages. Smart Mortgages is one of Northern Ireland's largest directly authorised mortgage broker. So we're independent, which means we have access to all the lenders that could possibly get you a mortgage. And my job is to make that as simple as possible and break down those jargon barriers and to give people good advice that is tailored towards their needs. Often that can be quite difficult. You hear all these terms like fixed cap, variable, interest only, and repayment, and people really ultimately want to know, can I get a mortgage and what's it going to cost? So our job is to make that as simple as possible and as easy as possible and guide them through their own situation, because everybody's situation is always unique to them and different. And look, some people come on this and they think it's going to be like an interrogation in Castlereagh, but ultimately it's not. You know, our job is to make it simple and they help them and guide them and take them to the right lender. Yeah,
it's so funny because I would say about a year and a half ago, I bought my house, and then Shay, you bought your flat recently, and we were having a conversation not too long ago, and I think you were earwigging in it, and you were just like, lads, this just seems like an absolute minefield. If like me and him were talking, like he was saying, oh, I had to go through this, and I was like, I don't know, it's stressful. And Tommy was like, I don't think I want to do this.
No thanks. But there's so much to it, you know, in terms of surveyors and solicitors and doing the right thing. And then once you've done it, I suppose you're kind of thinking, well, that wasn't such a big deal. But ultimately, giving somebody a bit of help and guide them in the right way. And, you know, the mortgage brokers are there. They take you to the right lender and work out what's right for you by asking you the right questions. So, yes, it is a totally daunting experience. And do you know what? It is a bit of a minefield. I'll give you that.
Yeah. And obviously, I think we obviously put an Instagram reel, an Instagram box out the other day, and obviously asked people for questions that they had for you. I think we'll dive into a little bit about that later on and go into the topic of mortgages. But I think one of the things we kind of want to do at the start of this is go into a bit about your background. And you have a pretty up and down story, and you talk a lot about resilience and stuff. So I think if you could kind of go back to your younger years and stuff and give us a bit of information about that. And
so I'm from the Northwest, and when I was 16, I got a job working for BT Cellnet, selling mobile phones. And a couple of weeks later, my mum died of a brain aneurysm, and at that point I needed to get somewhere to live. So I went and got a flat in a place called the Craic Village in Derry, and from there I continued on with my studies and stuff and worked part-time. But, you know, wasn't always easy. It was pretty difficult. Could have went down the wrong path, but luckily enough, you know, I was able to sort of keep going, and eventually then went to university over in Edinburgh, studied computing, continued to work for what then was O2 at the time, went and worked for them in London, and ended up then deciding, well, look, I finished my degree, you know, what's the career path? Didn't really like computing anymore and decided to get into mortgages. So I came back to Northern Ireland, and there was an opportunity to get back into mortgages. Unfortunately, the 2008 crash happened, and I had to sort of reinvent myself. So we started marketing on Facebook and became on the board of governors of my old school. Done a bit of charity work, became a president of the Junior Chamber of Commerce. But ultimately, mortgages was my job, and I've been doing that now for 16 years. And being independent and giving good advice and giving good customer service is really what it's all about, and getting repeat business back. But do you know what? You know, when you look back on life and you think, God, that was difficult, you know, and it was. And I feel like one of the luckiest people now. You know, I've got an amazing business and an amazing family, and look, a great wife and 2 kids. So I'm very lucky, but it wasn't always easy. But I suppose the message I would tell people is, look, don't give up. You know, life throws things in front of you, and it's up to you to sort of get around that and keep going.
Yeah. Was there ever a mindset whenever you were just that after your mum passing and stuff, did you ever just want to sort of give up and, like, you know, as you said, that was early before the podcast, like go on the drink and just not bother with life? And
well, the truth is that after my mum died, I didn't really have any I suppose, anybody to drive me or push me, and I ended up having to repeat the year that I was in at the Northwest Regional College, and there was a bit of a light bulb moment. And I thought, I need to get out of the situation, get out of where I am, and the opportunity came to go to university, and I managed to get the grades, but there was a slippery slope. It just happened to stop, and I don't know if that was divine intervention from her or what it was, but the opportunity arose and I took it, and this could be a very different conversation. And I feel lucky that it hasn't been, and I would, I grew up in a single parent situation, and I would tell people, look, don't always just think that you're going to be trapped. Look, keep looking at the other options that are there and try.
And when you look back at that time, obviously you were raised in with a single parent, and then obviously whenever that day happened where your mum passed, like do you think when you look back now, obviously you went on to study computing, but then you get into like mortgages, and do you ever look back now, I suppose there is that sort of like connection where you had to go out and get your own place, almost like forge your own path in that sense. And I suppose looking at it now, a lot of people, they may not have as obviously as tragic as a story, but at the same time they're going out and trying to find places to live now. Do you think you make the connection there?
I don't think there's a day goes past where I don't think I'm really lucky in the situation that I'm currently in, and I'm thankful for everything that I have. Look, at 17 I had to pay an electricity bill, and I had to go out and get food and and things like that. So my childhood was kind of cut short a little bit. Most people were out partying and drinking and I had a carefree life. I didn't, but that's not to say that I would change it, because it's also ultimately made me the person that I am and as resilient as what I am today. So I wouldn't be where I am without all those things happening. So that's kind of the path that life sort of took for me and chose. But do you know what? It's not that long ago I bought my first house, when you think in relative terms, and I look at customers and try and treat customers in the same kind of way, because ultimately it's such a big financial commitment that you've got to treat everybody exactly the same. It doesn't matter if they're getting a mortgage of 50 grand or 250 grand, treat everybody exactly the same, and stick to your principles. But look, it's been a bit of a roller coaster.
Was that a stressful time financially then? Like, you're like 17, most people are probably working part-time and then spending their money on like going out, they're like getting clothes, whereas like you're financially supporting yourself, having to pay bills, having to pay rent. It
was challenging. To tell you the God's honest truth, I have no idea how I done it. I've kind of just blacked out.
What were you doing though? Like, were you working part-time while studying, or were you working?
So I was working for BT Cellnet at the time, selling phones 2 days a week. It was great. When I think about going to Tesco's and buying pasta and sauce and living off, that, like it was challenging.
How would you say the driving force was behind it? Was it just you, do you think? Because as you said, like there was no one really around you to push you to do that sort of thing, but did you just find that within yourself to do it?
Ultimately, I think it probably was. My grandparents were still alive at that point. And they were great, but there was just something inside me that I realized that if I wasn't going to do it, nobody else was going to do it for me. And I think I've sort of done that to my own detriment at times. Now I just do things and I just do them myself. But as I get older, I get more reliant on other people. And I've got an amazing family now, so I'm really lucky.
So obviously your story, you kind of shifted at that point, and then you got the opportunity to go to university, you studied computing, and then obviously you realised the numbers, the crunching of data and the coding was maybe not for you.
Do you know what I like about mortgages? I like that every single situation is different. And I like talking to people about their situation, because one couple is very different from another person. And that's what I like about it. If I was sitting in front of a computer all day, every day, just sitting on a screen, it would kill me. I like the interaction. I like the challenge. I like the problem solving more than anything, because people come and, maybe somebody's got a stipend, or somebody's got a 0-hour contract, or somebody's 1 year self-employed or something like that. I like the variation and the difference. Computing it really wasn't for me. But in saying that, it gave me a very logical mind.
Mhm.
And I was able to use the logic that I learned from computing to be able to transfer that into financial services and the problem solving skills. So it was a really good base to get into that.
Yeah.
I just managed to fuse the two together.
Yeah.
And it sort of worked well.
And why mortgages? Like when you speak about it now, it seems like you're pretty clear on what you wanted to do from computing. It seems just a bit of a random jump to me.
There was an opportunity that was there and I took it. In hindsight, was it the right thing? I'm really not sure because I just went on straight into the credit crunch. But
Yeah.
I kind of thought that the credit crunch would only last like a year or two. I didn't realize that it would probably take the best part of 5 or 6 years to come out of it. But I felt that I was on it and I wasn't going to give up because, you know, resilience and not giving up is probably my greatest asset. And it's where it's taken me to where I am today. You know,
Yeah.
So you really started off in the credit crunch then? Like that was
just
sort of the start of your mortgage career then?
yeah, just before it, like
Locked on.
like 6 months before it was a disaster.
What was that time like though? Because you know people talking about now, and we're in a recession and blah blah blah. Like before that, the 2008 crash. Like, what was the feeling? What were people saying? Do you know what I mean?
People were just buying houses. People just wanted to buy houses. And they didn't care. You know, everybody was buying houses. The prices were jumping like 10, 15 grand every couple of months. Like it was crazy. And, you know, then I suppose that reset was going to happen because they were giving everybody mortgages, no matter who or what they were. And it happened, but Northern Ireland was probably affected the worst out of all the regions in the UK. And it's actually an interesting stat. I think we're still 17 or 18% behind the pre-crash price of 08. We still haven't caught up. We're the only geographical region in the whole of the UK that hasn't actually caught up. So that's part of the reason why we're such a growth area at the moment and why in the last, I would say 24 months, we're the only region in the UK that's outpaced everybody else in terms of property prices. So when people in Northern Ireland think that property is getting expensive, well, it's actually only really catching up from where it is. You know, you take the northeast of England, they've all caught up. We haven't. So it's interesting.
It's probably not what a lot of people want to hear.
No, it's not. And you take the positive migration and the amount of people that are moving home, you know, that have been living away and things like that. That's all driving factors in the property prices in Northern Ireland.
And you see, like I sort of have a vague memory of that time. Like my parents were estate agents back in like the 2008, and I remember like houses like at that time maybe that were worth 200,000-300,000, and them selling for like 400,000, like just a crazy. Like they couldn't believe it. Like, but like there was people throwing money at houses.
Yeah.
Like, was there never an expectation like this is all going to come crashing down? And then like even whenever you started and stuff in that industry,
I didn't really actually know any different.
Yeah.
If I'm honest, I just sort of came into the deep end of it. But to give you an example, there was months where I didn't have enough money to pay my mortgage. Like we weren't making any money at all.
Yeah.
Like it was tough times. People were going bankrupt. People were throwing the keys back. Like if you take it, some of the houses are down 40% in price. So if you bought a house at 200 grand and all of a sudden it's worth like 110, you know what I mean?
Yeah.
God.
Like it was like tough times. People were really, you know, and it was a global issue. It wasn't just it wasn't just the UK. Like so.
Yeah.
And do you see people talking now about how bad things are and think, do you see similarities, or do you think, Jesus, you don't know what it was like back then? Like,
don't get me wrong. During COVID, I thought, here we go again. Like, like there's, you know, some of the lenders were thinking about giving people like 2-year mortgage holidays and stuff like that. Like they were getting prepared for bad times. Luckily, it kind of turned a corner, and then the property market seemed to take off during COVID because everybody was sitting in their house, you know, doing nothing. But there, I won't lie, like, you know, there was a time during COVID where I thought, this is it. You know, I might as well like throw the keys to the house back because I don't think we're going to come out of this. Luckily, we all seem to survive. And do you know what? We've turned a corner, but there was a time during then I thought, I just don't know. I don't know how this is going to pan out.
Yeah. Why do you think we'll have come out of it? Because it really is an anomaly, like, isn't it? Like
people are fed up living in big cities, and the amount of people that work in Northern Ireland, live in Northern Ireland now, that work remotely in Manchester and London, that get London and Manchester wages and salaries is just insane. Like a significant amount of tech people have moved back. Like, you can imagine the house that you can buy in Northern Ireland as opposed to what you buy in Manchester or London. You know, people are buying mansions for 400 grand in Northern Ireland that wouldn't buy you a flat, you know, in London. And I think people's lifestyle choices, like if you live in Northern Ireland, you're probably never an hour away from the seaside or the ocean or a beach, you know, but in London, it's different kettle of fish. Like,
we were over in London there me and my wife were over visiting her sister, and we were actually sitting chatting about this, and it is absolutely crazy. Like the amount that they pay for, like they live in a 2-bed flat, and the amount of like money that they're paying as individuals would cover like a house rent up here. And I'm like, that's because I know how much like you guys were paying whenever you lived in Eglantine. There was like 3 of yous.
Yeah, what were you paying then?
Was it 300 each, was it?
I think it was 2.
Whereas they're paying like 780, and I'm like,
I think the average 1-bed flat in London, I seen a stat the other day, it was 1,850 quid a month.
Fucking hell.
Like, what could you get in Northern Ireland for that? Like it's
2 or 3 mortgages.
Awesome, man.
Yeah.
Unbelievable.
But obviously, kind of want to go into you started off in a whenever you wanted to go down this sort of mortgage route, you started off in a business. You had no experience whatsoever in this stuff. So like, what? Like, I imagine me just going to sign today here. I wonder if I could do mortgages. I would say a lot of people would be like,
but that's like me saying to you, I could just go and do marketing.
Yeah.
Do you know what I mean? Or do another job.
Yeah.
There's a point in time where you have to decide what your career path is, and then you've got the skill set for it. You know, so it's just kind of one of those. It's come naturally to me.
Yeah.
Do you know, seeing problems and being able to fix them is where it has, but it's been challenging.
So like, I assume you started out at a very, very junior.
I started out making the tea. Like,
nice.
like literally, like if I told you what my starting salary was, you would laugh at me. Like, but yeah, look, I started off, had zero experience in mortgages, and sometimes that's been the best, because when I've brought people into the business or trained them or talked to them, I started at the very bottom. So I know every single process and every single part of the business the whole way right through, and it makes you a better business owner, if I'm honest.
Yeah.
Would you say your sort of love for the industry has sort of come from the people that you worked around at that time? Has it sort of enticed you to continue on, and have they encouraged you?
I don't think so.
No.
Actually, my love for it has probably come by helping people. Like, see the day that you found out that your mortgage was approved, how happy were you?
Yeah, buzzing.
Like it's like the day you get the keys to that house, it's euphoric. Like,
but what we bought at the time where there was mad amount of, like, I remember walking into a house, it was like 160, and I went for like 189. I swear, like, I'm not joking. Like that we were in, and I remember going to look at a house in Grace Hill. It's like a wee area not too far outside Ballymena, and like stereotypically the prices of houses around there was mad. But I remember literally seeing the house, was there 2 days later looking at the house, and someone was already like $5,000 over asking, and we were just like, this is impossible. We thought this is impossible, and then we ended up kind of refining our sort of expectations, and then we found the house that we're in at the minute. But like, we both walked in the house and went, this is it, like, and we did end up paying more than asking for it, but it was like, it's grand. Like, but I remember the whole process, it was just, it's like a roller coaster of ups and downs. But when you actually get the keys, it's a weird day when someone hands you the keys and you come in and you're like, right, but this is mine now.
It's like one of those things, when you walk into a house, you know when you know.
Yeah.
Like, they definitely say that, you know.
Yeah.
You just get a feel for it. You like it. It's in your heart and you want it. And then emotionally you move on it in your head.
Yeah.
So you're like, that's my house. Get the mortgage done like yesterday. And when people contact us for mortgages, you've got to be responsive. So it's a very emotional thing. You know, get it on, get it done, get it approved, and you know, tell the people, because the anxiety around finding, you know, is it approved or is it not? It's mental. But see the buzz when you tell people your mortgage is approved. Like, I have a load of thank you cards. I have a wall like thank you cards in my office, and like some of those people, you know, it changed their life. You know, there's people that came to us 2 years prior with bad credit or situations that needed a bit of work, you know, and then they've come back, and all of a sudden now they're like, thank you so much, you've changed my life.
Probably people thought that they would never get houses.
100%. You know, there's people with no deposits that need ownership. There's people that, you know, have had to save a deposit, you know, really hard graft, have had to come in, budget plan, you know, really get a plan in place. You know, people who don't understand that there's licenses out there which give you, you know, an additional support from the government. There's all kinds of things, you know, it's just so many, and that's what I love. I love hearing people's situations and challenges to be able to help them.
Is that a common thing then? People coming to you and you maybe just giving them a bit of advice, like, you aren't really there yet, but if you go away and do this.
Massively. And I tell every single person, get in touch. Doesn't cost anything. We'll work out what your affordability is. We'll explain the process. You know, get a decision in principle. Like, do it a year in advance. You know, go to a mortgage broker and literally say, this is my situation. Where do I need to be? What can I afford? You know, this is how much we're saving, blah, blah, blah. That to me is invaluable, because ultimately you've no idea what the costs are involved. You know, the hidden costs like solicitors, you know, is there a survey fee, is there stamp duty, blah, you know, get your head around it. And don't be, I tell people all the time, don't be afraid to ask questions, because no question is silly or stupid.
Yeah.
You know, just ask.
Yeah. I think that was one of the things that, like, looking back on the house buying journey, like for me, was like, I think we probably started the process way too late. And anybody that I talk to now, and they're saying, oh, we might go buy a house, thinking of buying a house, but another year down the line, I keep saying, like, go and talk to someone, because whenever them dominoes start falling, it's like, it's quite thick and fast, like. And it literally is one of them things where if you just reach out and get your kind of ducks in a row early, it's a much more, probably less strenuous process.
Yeah, it definitely is. Getting your bank statements, like, funny stories about bank statements. I see people and, you know, they're transferring their partners money and writing things on them.
Yeah.
You know, that they really shouldn't be writing. You know, you have to think about, you know, that somebody's going to be looking at these bank statements. Like, some of the stuff I've seen is wild. Like, you know, especially around stag do's and hen parties, and you know,
there was actually, to be fair, remember whenever there was a time where we all we rented like a studio, and I think it was you paid something, and we have Monzo, and I transferred you something on Monzo, and I think I called it something like Passionate Time or something, like a tenner. And then whenever we print out our Monzo, because I didn't realize the boy needed everything, so he's like 3 months bank statements. I thought, no bother, I'll give you 3 months bank statements on my main bank account, and he was like, no, 3 months bank statements of all your bank accounts.
All your accounts.
And I went, now here's where we're, no. And then I'm handing it over, you're like, oh God, to be fair, I only did it once, I think. But like little things like that. So like people wouldn't even think about that.
No, they don't. Like, some of the, like, I see people with like OnlyFans, you know, all that kind of carry on. And they're like, don't be telling my girlfriend about that. So, like, are you
sure your sins will find you out?
I literally, this is quite funny. I was on a mortgage meeting one time, and the guy handed over his bank statements, and he was giving me the eyes. He was like, you know, and I was like, what's going on here? And his girlfriend was sitting beside him, and he just kept looking at me, and I thought, what's going on here? And then I realized it was because he had OnlyFans coming out of his mouth. So you see everything. Yeah. But see, if I'm honest, the lenders don't actually really care.
Yeah.
Right? Yeah. If you shop every day in Primark, or, you know, you buy Costa coffee every day, they don't really care, as long as you're not going over, you know, your overdraft limit, or if you're, you know, going under the red and missing payments and stuff like that, then it's an issue. But, you know, like, as long as you've got an explanation.
So there, what I suppose that's one thing a lot of people don't realize, because like whenever at the time you're going for mortgage, like a lot of people say, oh, you better not be gambling, because like they'll red flag that. But like, is it true to say that a lot of them guys only will look at it if they see like mismanagement of money?
Yeah, look, see the odd bet here and there, it's not an issue. It's really not.
Yeah.
If you're betting week in, week out, then it becomes a problem.
Yeah.
You know, if it's 50 quid a week and it's every single week in life, then they're going to take it as a credit commitment. But if you're doing 5 quid, you know, on the national, and then like 10 quid on the FA Cup this week, it's no issue. And there's a lot of misconceptions around, like people will come in and say, I'm on my overdraft. Am I going to get declined for a mortgage? But I don't have any credit card debt and I don't have any loans. No, they just take it as a commitment and look at it in the same kind of way as that you would have, a loan or a credit card. So there's a lot of misconceptions. People come in and go, look, I was in the hairdressers the other day and I heard that 20 years ago you needed to get such and such to do a mortgage. Times have changed. So I would always tell people, go speak to a broker and get up-to-date advice on exactly what you're doing. So I'm a zero-hour contract worker. Can I get a mortgage? You can, as long as you can prove a 12-month track record of it, right? But somebody who's just done it a week, well, you've no track record, so you can't get it. But you have to think logically and how the lenders are just looking to find out whether or not you can afford it and pay for it.
Yeah. So what is it they're looking for whenever you're sort of handing your track record? As you said, the 12-month track record. Is it just that there's a constant wage coming in? It doesn't have to be a specific figure, but it's just over a certain threshold or what?
So it all works on affordability. But what they'll do is they'll look at the track record. So if you're getting bonuses and overtime and things like that, what they'll often do is they'll ask you for 3 months or 6 months or 12 months of it. But it just depends on the lender. Some lenders will ask for 3 months, some will ask for 6, some will ask for 12. But I've seen people who are IT workers who get paid a thing called IR35, which is basically they send an invoice and they get 20% off. I've seen people that are doing that 6 months, being able to get mortgages. So there's a lender for everybody. Yeah. It's just finding the right one for you.
I was speaking to someone the other day, actually. It was a good thing just to mention that they knew a barrister. So the barrister pays very depending on the time of year and stuff. They'll maybe get paid a massive lump sum, say at the end of the year, but they could be waiting like 6 months for their paycheck. Something like that, is that more difficult for someone like that to get a mortgage, or?
You just take them to the right lender for them. Do you know, there's old school lenders, right? That are very manual in their process, and you can go and talk to them and say, look, there was a credit issue there 4 years ago. Guy was at uni. Look, he lost his job. That's okay, it's no problem. You put that onto some other lenders and the computer says yes, the computer says no. So it's just about having the experience to know what lender they take it. But yeah, somebody like that, it's a unique situation. You just need to know what lender to take it to.
You wouldn't think that that's still a thing. You know, the way I imagine it is like you fill out all your information on the computer and it puts out like mortgage providers, whereas you can still go chat to people and explain situations and stuff.
They'll not mind me saying this, right? But I'll tell you. So one of the more flexible lenders in Northern Ireland, right, and we're very lucky to have them, is AIB, right? Yeah. They're pretty manual in the way they do it, right? But you can go and talk to them, and I can go and talk to them. I can lift the phone to the head underwriter and say, look, this is a situation. Look, this guy, a bit of a credit issue a couple of years ago, but it was a blip. It's all paid, no problem. Here's their background. This is what they do, and you can talk to them about their situation. They're self-employed. Look, they bought a digger or a tractor, and it's on their accounts. Yeah, you can do that. But there are still lenders that will do that. But don't get me wrong, 90% of them are computer says yes, computer says no. Like, so it's just you know. And one of the other common misconceptions is I've got no credit, I can't get a mortgage. Again, there are lenders out there for you that won't look at that. You know, they won't turn around and say, well, you don't have a credit card. I've seen people coming on to me and they go, another mortgage advisor told me to go and get credit. I don't know why, because you know what, that's a total myth.
I've heard that so many times, like mortgage advisors advising people to go out and get a credit card and start spending on it, even if you don't need it, like just spend on it to sort of build your rating and stuff.
There is a place for that. And, you know, some of the bigger high street lenders will want you to have a credit rating because their computer system can build up a point system and see where you are. But ultimately, that's not. You know, there's other lenders out there. Like if you came to me and you said to me, look, I'm 30 and I've never had a credit card in my life. Well, I would say that's okay. I have a lender for you. Yeah. And we're not talking more expensive, just a different lender.
Could it affect fees though you're paying back? No. Could they be slightly higher or anything based on that?
No. It's total common misconception.
Really?
Totally. Like, totally.
Is there anything that surprises you? Like people like come in and sort of, is there anything that like is not very widely known about the process, or is there always a thing that's when someone walks in, are they kind of repeatedly asking the same questions? Or
there's always a lot of somebody told me this or somebody told me that.
Yeah.
which is like the credit issue. 95% mortgages and new builds are available. Co-ownership with no deposit is available. Self-build is available. You just have to know what lender they take the person to. There's a lot of lenders. Find the right niche. For them. It's people that go to their own bank, which is the bank that they've banked with for years and years and years, and they've been declined. And then they come in and go, look, I've just been declined for a mortgage. Can you help me? Does this mean I'm going to be blacklisted? And I go, no, it doesn't. If you've been declined for a mortgage by your own bank, that doesn't mean that their criteria fits you. There's other lenders out there that possibly can do it. So as a mortgage broker, we have access to all the lenders, and we ask the questions and then work out which lender that you go to. And by the way, there are times when you have to go to a second lender. Something's happened, they don't like the house or blah, 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 blah. But that misconception of my mortgage has been declined, is that now on my credit rating forever? Can I not get a mortgage elsewhere? Am I blacklisted? No, you're not.
Yeah. Are there mortgage brokers out there that don't have access to all lenders? Are they sort of specifically under certain companies and stuff?
Yeah, there's people that are under networks and don't have access to all the lenders. And I would always say to somebody, if you're going for a mortgage, ask that question: do you have access to all the lenders?
Yeah. So they'll be like contracted then, say for example under NatWest or something. They're only
not
allowed to do
NatWest,
those,
but
or?
they just wouldn't have access to everybody.
Yeah.
So
that takes your pool and kind of lessens
and
it.
If you pass with one lender with credit, you might not with somebody else, or somebody else affordability. Like, to give you an example, I seen a case very recently where somebody was getting 120 grand with one lender and 140 with another.
Mm-hmm.
So it's about knowing where the affordability calculations are.
Yeah.
What way does that work? Like you're saying, like different mortgage brokers have like different lender like networks. Why is that, or what's the benefit of that, or why is it the way
it's just the way they're set up? We're directly authorized, which means we have access to all of them, and we're directly authorized with the FCA. We're not through a network as per se. Some people prefer to do it because the network looks after their compliance and basically sets them up and guides them. But we're directly authorized, so we do all that. We have all our own in-house compliance and stuff like that. I thought when I was taking over the business, that was the right way to go, because ultimately you want to have the biggest range and scope of access to lenders possible.
Yeah. That's also something before we start, because I appreciate we have a lot of questions on the topic of mortgages, but I think just to sort of delve into what you just mentioned there. So, like, you started off making tea and coffee, and then you ended up taking over the business.
Yeah.
So, how long were you there for? Like, kind of learning the craft?
It took me about 18 months to get the qualifications and get the experience, and then to be signed off technically as competent, right, to be able to deal with customers. So you need to have a level of experience to be able to answer situations. And then the credit crunch came. We worked our way through the credit crunch, and then in 2016 I bought the business. So an opportunity came about with the person who owned the business, wanted to sell. I bought it, but then I wanted to take it in a different direction. I rebranded it, called it Smart Mortgages. I wanted to digitize it. I just wanted to make it more modern. Smart Mortgages, obviously, if you Google something, if you Google a plumber, you're going to plumber Belfast, mortgages, smart mortgages, So I just thought the world's changing. But yeah, I took it from where it was to where it now is, and it's changed direction, changed culture. It's just a different business. Like,
what was your position at that time? Whenever you were taking over, were you just like a salesperson?
I was just an advisor.
Okay.
I was just an advisor within the business, and the person who owned it wanted to sell it. So I had two options: I either work for somebody else, or I go and find the money. And it's interesting that whenever I went to buy the business, I needed to borrow some money, and I went to 5 banks, and the last bank said yes. The previous 4 said no.
Right.
Was there other people working on it whenever this happened as well?
Yeah.
And did you just take over them stuff, or
There was 2 other people working on it.
Yeah.
And now there's a significant amount more. Like,
do you think it was surprising to the owner that you wanted to buy it? Was it a bit out of the blue, or?
he offered it to me. He said, "Look, I'm selling this business, and I'll give you first refusal on it."
Yeah.
I don't know.
what was his reasoning for the sale? Was he just sort
Retirement.
of retirement?
Yeah.
Just didn't have the drive just wasn't really there anyway. Just had an oversight function. So, you know, it was just retirement more than anything.
Because you've been there like was it 19?
No, I'm there now.
Yeah.
16, 17 years.
Yeah. Flip.
Nearly 18.
Yeah.
To be honest, it's that long ago. It feels like it feels like a totally different life.
Yeah.
Were you having thoughts about going out on your own while you're in the business, or was it just sort of the opportunity came up and you couldn't say no? Or
Yeah.
Yeah.
Actually, I thought I could do this myself.
yeah,
And that possibly was one of the catalysts for the sale of it, because at that point I was the person who was bringing in the most business, and it maybe getting to a point where, do you know what, if I don't sell, he might go.
yeah.
Aye.
Because I was thinking you'd have to have some sort of like a certain type of mindset. That it doesn't seem like the type of thing where like you don't. I'm sure I lost my train of thought now. Like it's not the type of thing you take lightly. You know, it just I'm just gonna buy this business. You must have been in the mindset of right. I want to take us to the next level here.
I think I've always been entrepreneurial.
Yeah.
To be fair, at the time when I bought it, was I sure that I could make it a success? Absolutely not. Like the night before, I remember not sleeping, going, "Am I doing the right thing here?" Like I have no idea if I can make this work.
You didn't think that after the fourth bag?
Yeah, I probably should have. I probably should have took that as a signal not to do it.
Yeah.
Um,
So that's where the resilience thing comes in again. You know?
Yeah, but I was just so determined that I wasn't going back to where I was when I was 17, when my mum died. You know, I wasn't going back to that situation. So I thought, do you know what? I have to make this work and find a way. But yeah, I'll never forget the day that the bank said yes. It was euphoric. I was like, oh my God.
But it's also cool as well because there is so many people like they get into, you know, a job and they go into a business and like they almost like, even though you get hired under, you know, a specific role, you almost like begin to delve into other roles and then learn how the general business operates. And then when an opportunity like that comes through, I think it's just like believing in yourself that, you know, I can just crack on and do this. Like, and the direction that you've taken the company in is pretty, like it was like you're explaining it to us, and I suppose like we're all sitting here going, well, that's the obvious way to take it and the way the world's going now.
And actually more recently, and it's actually, I'll say this, like it's down to Owen Coyle. Like, do you know, Owen started doing the whole Instagram piece, and then he said to me, look, you need to get on this, you need to jump on this. And I did. And I had a video, I think 2 days ago, done 203,000 views. I had a video last week, done 220,000 views. So, you know, that has expanded the market, and we've started doing things across in England, Scotland and Wales, which we wouldn't have had a customer base if we hadn't used social media. But COVID probably has taken people's ability to use video conferencing, you know, ahead by years. Now it's totally acceptable to do a meeting on Zoom, as where before COVID, it was like, Zoom, what? I don't want to see your face. I just want to talk to you. Yeah. So, you know, that changed pretty much everything for us. But yeah, where it is now, where the business is now compared to where the business was even 3 or 4 years ago, is totally, it's transformed. Like it's just the whole online idea of being able to sit in front of people on a computer and give them advice in London is just, it's amazing.
Other than like Zoom, what's been some of the main differences to the business? Like what's made it grow and change so much?
The culture and the people. I'm very lucky. I work with some amazing people. I work with some really great brokers who work alongside me. And I never say that they work for me. I say that they work with me, because I believe that we're all together on it. And without them, I probably wouldn't be where I am today. But we've got some, you know, I was the first mortgage broker in the UK involved in a piece of software, a piece of fintech software that was built on blockchain. And I helped design that piece of software and guided them through it. So for example, you contact me and you want a mortgage, I can send you a link. You can log into your own portal. You basically go on, put in all your details, get a copy of your credit report. You can upload your documents and do everything. So you can pretty much manage your own mortgage journey, right? But yourself on your phone. Do you know, that has been a catalyst to make things more efficient. And I'm always about efficiencies, APIs, you know, how do we make things quicker and stuff like that. But yeah, probably the people, but ultimately technology has helped massively.
Yeah.
I suppose that's the computer aspect of it
That's-
comes back into play again, isn't it?
That's me, you know, being able to fuse the computer experience with that. You know, it's like I've always thought I've wasted that degree. When am I ever going to use that?
Yeah.
But I have used it. You know,
And how did you get into creating that sort of thing, the software?
I don't know. I suppose there was an opportunity. There's not a lot of mortgage brokers out there that would have that sort of skill set with IT. And I've got some great friends in the industry, and one of them said, look, would you give us a hand and just sort of tell us about user interfaces and what you would like? Would you give us a bit of feedback? And then it just sort of snowballed from there. Like,
Yeah.
But it's an amazing piece of technology. Like, there's been millions and millions and millions spent on it. Like,
Yeah.
I haven't came across it before, but is it just, it's more or less a hub then? You can just manage everything to do with your mortgage then?
that's where
It's for the consumer, isn't it?
yeah, so that's where it's going. That's, you know, they'll be able to log in, find an approximate valuation on your house, find out an approximate valuation on your mortgage balance, you know, when your terms are up. It's going to be, for us in terms of brokers, it'll totally change how people do things.
I
Yeah.
suppose it's good too, because a lot of this younger generation coming up, they're more inclined to maybe not so much to speak to people, they'd rather maybe
They do.
do it from their phone.
They do. And the thing about it is I send you a link and you go on and fill in all your details. It takes you 15 minutes, as where instead of me interrogating you, asking you, look, how much do you spend on bread? How much do you spend on food? How much do you spend on diesel? You know, what do you do here? It does all that for you. You know, you can do it in the comfort of your own home. So the technology has definitely helped us take us to the next level. And it's what sets us apart between all the rest of the mortgage brokers and us.
Yeah. And would you find like a generational change now from what you would have dealt with maybe 16 years ago to the clientele you're getting coming up now?
Absolutely. The people and the people that, the younger people, what they're earning, working in IT and some remote, there are people earning US dollars, living in Coleraine, you know, it's just like working in New York every day, you know, but I'm sitting in my house in Coleraine. Unbelievable.
Earning big money. Like.
Put it this way, I've seen God knows how many 20-year-olds earn 200 plus.
Oh God, you serious?
Actually,
And
what sort
I
of
actually
work?
put it this way, I have seen some incredible amounts of people earning day rates, maybe earning £1,000 a day, doing stuff online.
Like their jobs, they're not their businesses they've made, they're actual jobs.
They're
working
actual
for people. And
so they'll do contracting like 6 months, 3 months, and literally, it's insane. Never, it would. Some of the incomes I have seen over the last few years for the ages, unbelievable.
Can you give us like just an example of one? Obviously, not give their information, but like age and maybe salary and.
I seen a very recently IT contractor, £1,000 a day. I would say within the last maybe a couple of days. Like
early 20s,
like I seen a case come through my office last week where somebody was earning 300 plus.
See, there's people though. There's like, but that's the thing though. Like,
Put it this way, I was like, what?
why do they need a mortgage? Like, can they not
Because they were buying buy-to-let properties.
Oh,
yeah.
So they were using a group structure. So they were bringing the money in the limited company, keeping the money in the limited company, and then using that money to set up other limited companies. Like some of I'm very lucky that I have done international sports stars, like international musicians, like household names. You know that. That's amazing. Like, wow. I feel very, very lucky to know some of the people that I know. Like,
it's class.
But I suppose all you hear now on TikTok is like our generation will never be able to buy homes, but you think they're differently. Like?
See, the reality is that's like few and far between, right? The average Joe on the street here now in Northern Ireland can still buy a property, right? If you have two people and say they're earning 22, 23 grand a year between them, right? You take an average income there, say 45, between 40 and 45 and 50 grand, and you multiply that up by 4, that gives them the affordability, you know, and in around 200, you know, 175, 170, you know, so there's there's a misconception as well about affordability and stuff like that. And see, as the rates drop, right, affordability will increase.
Yeah.
So, I personally think interest rates will drop August, September, and that'll be the start of another property boom.
Yeah.
I think you're going to see interest rate drops next year, and I think you're going to see those house prices jump again. So I would say to people, if you're thinking about getting mortgage ready, you're thinking of buying a house in the next 18 months, start the process now, because see, when those rates drop, people are either waiting for house price increase, right, or the rates to drop and get more affordable. The rates are dropping.
Yeah.
Just based off what Shay was saying there, I think it's like you see it all the time. People saying, "Oh, our generation will never be able to afford a house." I think it's people's expectations of what they want their house to be as well, though, is a bit unrealistic. Like people maybe, like, I'm just imagining people maybe mid-20s, like watching the likes of Molly May and all these big influencers living in these big fuck-off houses, and they're like, "Oh, I want to live in a house like that," but in the reality of it.
Do you know what? I tell people, like, there's an old saying, cut your cloth accordingly. Like, some people want a really nice lifestyle and want to go on holidays all the time. Well, don't buy a big house. Do you know what I mean? Yeah. There's nothing wrong with buying a very ordinary house and having a better lifestyle. There's some people that don't drink, don't smoke, and their house is their pride and joy. That's their thing. Yeah. Well, that's fine. Do everybody's situation's differently. Everybody's unique. But, buy a fixer-upper.
Yeah.
Like, get on the property ladder, buy a fixer-upper, do a bit of work to it, increase the value. It's called a property ladder for a reason. Yeah. Buy it, do it up, sell it, buy it, do it up, sell it, buy it, do it up, sell it, and ultimately get up that sort of level. It's very rare you see somebody coming on, the first time buyer, saying, let me buy it 250 grand. Like, it's
Is that sort of a ballpark figure? You said there earlier, you 4x your wage for the year. Is that something to sort of...
Well, you've got to take other things.
Idea? You've
got to take... 3.75 is probably a better indication of it, right? 2 salaries is a lot better than one. Affordability calculations with 1 salary is tight because you've got all the running costs of the house. Once you add the second salary, it increases a lot. But you've got to take into consider childcare, child costs. Do you have a car? How much is the car a month? Have you credit cards? Blah blah blah. So there's an affordability calculation around all that.
Yeah. I suppose this might be a good chance to delve into some of the questions that we've kind of came across our way. I think the first one, I suppose, for to ask you, it seems really basic, but at the same time, there will be people out there who are driving the car and listening to this who maybe don't know. So, a mortgage, what is it and how do they work?
Effectively, you buy a house, but you're technically only renting it from the bank, right? You don't own the house until you've it paid for. And there is a bit of a seesaw effect because we're seeing longer terms. We're seeing people go for 35 years. We see people even going for 40 years. Until you start to get down the years, you don't pay an awful lot off the mortgage balances. So people often come and go, I haven't paid an awful lot. I've been paying that mortgage for the last 3 years and it hasn't gone down anywhere. Yeah, it's because you've got a 35-year mortgage. So, the shorter you can take the mortgage, the quicker you're going to get it paid off, the less interest that you pay. Don't be shocked if you see you borrowing 100 grand and paying 200 back or paying 250 back. Because the longer you take that term, so interest rates are going to go down and that's going to become cheaper. But yeah, effectively, the mortgage process, people come in, they get a credit check done, they get a decision in principle letter done, we check their income, stuff like that. They go find a house and then they come back and say, look, I've sale agreed in this house. We find the best rate for them, we find the right lender for them, and then we go apply for the mortgage. A surveyor goes out to the house. Then they get a copy of the mortgage offer. Once it's fully approved, the solicitor gets a copy, we get a copy, and they get a copy. And then the legal work then all starts. The solicitor then takes over, checks your boundary, checks what you're buying, what you're not buying, stuff like that, and keeps you right. And their job is to make sure you can sell the house again, ultimately, because anybody can just buy one. But it's the problems that might arise whenever you're going to sell it. So that's the process.
I think it would be good if you could explain, like, the reasoning behind the interest on it. Why you can't go to the bank and be like, I need 100,000, and then you pay them back 100,000. Why that happened?
right? So
I understand it, but I just want to like
so
dumb
can
it
I-
down for listeners. And
if one of your friends, right,
People are.
if Ross said to you, "Can I have a lend of 100 quid?" Right?
Yeah.
Would you just say, "Ross, there's 100 quid back," and you can give it back to me over 25 years?
yeah.
Do you know what I mean? Like, so,
yeah.
like you would be looking for interest on it.
Mhm.
So ultimately, the bank's giving you out money, and it's their long term money coming back in on it.
Mhm.
That's kind of where it is. Interest rates, the Bank of England's 5.25. So, interest rates are much higher than they've been for the last 13 years. But the new will probably end up somewhere in the region of about 3.5% to 4%. But yet, look, the bank has to make money.
Mhm.
The savers. So what happens is people save money in the bank. They expect a return on their savings. Those savings are used. They fund mortgages.
Yeah. And what's the 5.5% that's set based on what they expect the money to be worth this time, however many years down the line?
No, so what happens is when you get a mortgage, they buy the money or they give their savers a return on their money for a set period of time.
Yeah.
So that period is, say, 2 years, 5 years. They sell the money out at that, and then they expect that in return plus their margin.
Mhm.
So if they're giving the savers 4%, they need 1.25% or 1.5% on it.
Yeah. But you see, whenever you're like, oh, your mortgage rate is like 5%. But you're saying if you're looking 100,000, but you're going to pay back 200,000. How does that equate to 5%? You're getting 100,000 out of that. But like, if in my head it's like
Fucking confused.
it's like you're paying 5% interest, but in my head it's like, sure, 5% on 100,000 is only 5,000. So why am I not paying back?
That's every year.
So yeah, so over,
You take that over 25 or 30 years.
yeah, so you're
that's-
paying back $5,000 every year for 30 years.
Yeah.
Yeah. But as the balance reduces, the amount of money you pay gets less.
Yeah.
So, as the balance comes right down, there's a bit of a seesaw effect with it.
So if if you say agree a mortgage of 100,000, so you're paying 5% of that every year. So say the net that's why a lot of people say it's important to try and like, if you can pay if you can afford it, like say after a year, pay a lump sum of like $5,000, because then you're only paying 5% off then a 95 grand repayment. Is that?
Well, ultimately, the quicker you can pay it off, the less interest you're going to have.
Yeah.
You'll see all these reels on TikTok and all these ideas that if you pay your mortgage weekly, ultimately you're just paying more.
Mhm.
That's kind of where it is, because there's 13 cycles in the year. But see, the more you can pay, and most lenders allow you to overpay by 10% of the outstanding balance. Some will allow you 20. If you have more money, you want to get it paid off quicker, I recommend people to take the shortest term possible. Sometimes people don't want to pay that.
Yeah. Why do they only limit you to like 10 to 20%? Why do they not let you pay, say, 50% overpayment?
You can get mortgage products that allow you to do that.
Yeah.
If somebody comes in and specifically says, look, I want a product where I can pay off as much as I want, I'll give it to them.
Yeah. But what is the reason for banks doing that? Is it just
It's just so that they can forecast where their cash flows are going to be.
Yeah.
To be honest, that's
And there is some lenders that do allow you, say if you can only pay 10% a year, there is some lenders that do allow you to fully repay your mortgage, but there's in the contract there's some sort of fee that they'll add on top of that for pretty much the privilege of doing that.
So that's called an ERC, an early repayment charge.
Yeah.
You'll see it abbreviated as an ERC. Yeah, the fixed rates are generally for 2, 3, and 5.
Yeah.
Right. If you take a 2-year fixed rate and you decide they pay it off within the first 2 years, there'll be a penalty. That'll generally be a sliding scale from year 1 to year 2. It'll be all on the KFI, which is the key facts illustration. So it's everything about the mortgage in black and white. Everybody will give you this, but it'll all be documented. And the lender, I suppose, is putting the money out to their savers, want to know that they're going to make X on it.
Yeah.
So they will penalise you for paying it off early. However, what I would say is that people, if you let's say for example Ross decided that he won 10 grand on a scratch card and he wanted to pay it off after his 2-year fixed, there would be a clause or a time in that where he could pay that off as much as he wanted before he went on to another fixed rate.
Yeah.
What is your thoughts on like overpaying on your mortgage? Like, is it a good thing to do? Is there like a certain amount when you're overpaying it, like there's no real benefit to it? Or
if you can afford to overpay it because you're paying less interest.
Yeah.
It's that simple. If you've got the affordability to they do that, then do it. If you, for example, get a pay raise and all of a sudden you were earning a significant amount more than what you were when you took out the mortgage, go ahead. Like, the banks don't mind you. I prefer to see people pay their mortgages off quicker. I'm not on the job to hold people out for as long as possible.
I think one of the questions from like a follower was like, are you better reinvesting that money somewhere else type of thing? Like reinvesting it into another property maybe than overpaying on your current mortgage?
That depends on your attitude towards risk. Some people want to just get the mortgage paid off and live happily ever after.
Yeah.
Some people want to build up a portfolio because they don't have a pension or they're self-employed or, whatever. There's people out there that borrow against their house just to buy other properties.
Each to their own.
It's
really.
each their own. Like.
Mm-hmm. Just trying to see if there was anything more. Obviously, you've kind of touched on the first time, but from a first time buyer's perspective, what kind of mortgage sort of process look like?
This interests me because I haven't bought a house and like used to. I remember when they were also saying him going through the process. You in particular was a fucking shit show. Like the amount of time you were waiting and stuff for like.
Oh,
I know, but that was just because his bank statements were all kind of like all crazy shit. Like,
but like say I come to you, I'm like, right, me and my girlfriend want to buy a house or whatever. Like, what is the amount of time is the thing? Because I'm really impatient as well.
He needs it done today.
I'll be like, how quickly can we get this done?
Tommy doesn't need smart mortgages. Tommy needs fast mortgages.
But what is realistic? Like, what is a realistic time frame?
Most property transactions take 8 to 10 weeks, sometimes 12, right? Because by the time you find a house, right, by the time you go through the legal process, and then by the time the person who you're buying from, they might have to go and find a house to buy, and then there's a chain and all this kind of carry on. But that's generally sort of 8 to 10 weeks. The mortgages generally should take really no more than 2 or 3 weeks, to be honest. If they do, then it's either because they're asking for more information or the surveyor hasn't been able to get on the property or something. But that's the kind of time scale. You can get an agreement in principle, which will give you an idea that you're going to get the mortgage, and then it's subject to their underwriting. Now, don't get me wrong. There was times during COVID where they were 17 days, but the broker should manage your expectations and say, look, see this lender that I'm sending you into, they're not going to look at this for a week. And then it's the underwriting process after that.
So 8 to 12 weeks is pretty standard. Is that like from coming to the likes of yourself and like you could have a house in 12 weeks or what?
That's from you agreeing the house, going and finding the house.
Oh yeah, so when you actually get the house, 8 to 12 weeks to get it all sort of done.
Generally. It's rare. If it goes much faster than that, it's because the person who's on the other house is ready to rock and roll and move. Generally.
But the agreement in principle is pretty, it's the kind of the first step, because then it kind of allows you to go, so say, this is, Halifax is promised, has have an agreement in principle you with for 180k, then that means you kind of know what you're working with, and then whenever you put your offer in, the people receiving your offer, they genuinely ask, do you have an agreement in principle, to kind of know if you're actually...
So the estate agent will generally ask, can you prove that you can get a mortgage? And can you prove you have a deposit? That's the starting block. Then they'll start to accept your bids and know that you're real. From that, you then, once it's agreed to, you get the solicitors involved, and then it's up to you then to hit the buttons and get all the documentation together. But, getting an agreement in principle way before you start looking at houses was not a bad idea. Getting an understanding of what the potential stamp duty costs are, getting an idea of what your affordability and the monthly costs, because you could be looking at houses of 300 grand, but realistically you don't want to pay for a mortgage any more than 180. So it's important to know that.
Does an agreement in principle expire, or
they generally last 90 days? 90
days.
But it's not, once it's on the system, it's not a big pile of work. They redo that again.
You can get a house without the agreement in principle. I didn't have one whenever I got mine. It was just sort of a case of we put the offer down to the estate agent, and then he contacted our mortgage broker at that time. But the mortgage broker would have probably provided a decision in principle for you. Is that based on his decision? Or? No, it would have been, so he would have made an app. Who's your mortgage with? NatWest. So NatWest, at that time,
probably didn't provide a decision principle letter,
Yeah.
but they would have had an okay from, they probably knew each other and have a relationship that says, look, he's good enough. I know
He's good for it.
I know he looks like a bit of a madman, but you know, he's not really. Like,
Don't worry about them OnlyFans charges.
There was a couple of questions. Obviously, you've kind of touched on it there earlier on. Can I get a mortgage if I have bad or no credit?
this is another common misconception. People come in and they'll tell me that they've got really bad credit, and I go, "Can you tell me why?" And they go, "I've got a couple of $100 in credit cards, or I've got $2,000 in credit card." And I'm like, how do you know it's bad credit? And they go, "I just thought it was." So until somebody actually tells you it's bad credit or gets a copy of your credit profile, generally, how bad is bad? Like, there's people that are just not paying cards, just, I can't be bothered. They got a mobile phone and just, the signal was rubbish, so just didn't pay it. That's, the lender's going to look at that and say, well, you didn't pay that, so why would you pay the mortgage?
Yeah.
Stuff that's historical, stuff that's years old. For example, you were a student and you had a bit of an issue with a card that you didn't have the money to pay, and it was 4 years ago. Not so much of an issue as long as you can explain it. There's certain lenders you can go to. Ultimately, things drop off your credit file after 6 years. But ultimately, if you're bankrupt or something like that, you have to declare it. And I have seen people that are bankrupts getting mortgages. It's not that you can't. You just have to declare it. Your credit has to be good from that point on. So sometimes people do make mistakes, but the banks are more forgiving than what you would think, as long as you're going to the right lender.
Is there anything that, like, I know you're saying there's a lender for everyone, but is there any sort of things that you're sort of like, there's no real coming back from that, or that's a nightmare, that situation?
There's people that just bury their head in the sand and just refuse to pay things.
So, like, what's the difference between, like, I know you're saying, like, people make mistakes with credit cards, whatever, but, like, give us an example of what you mean when you mean, like, bury your head in the sand?
So there's somebody that, let's say, 3 years ago, just refused to pay their credit card, right? And you'll see on your credit history, number 1, 2, 3, 4, 5, 6. 1 means 1 month pay must, 2 months must, 3 months must. You see people and it gets to like 6 and they've just went, can't be bothered with that. The lenders, if there's an issue where, look, you must 2 payments because you lost your job and you couldn't pay it, that can be excused, that can be dealt with. But somebody that's just turned around and says, I'm not paying you. Or, when I say put their head in the sand, just didn't pay that credit card. Just can be bothered.
Like, so would you look at something, so say, like you're saying, like you lost your job, you couldn't pay it, there's a reasoning behind it, like you have an explanation, but like if someone was like, their salary's coming in every month, they can afford to pay stuff, but they're just not paying that one thing, like there's no real excuse there.
There's no real excuse there, like.
Yeah.
Like, there's not really. Like, you've just literally borrowed money off somebody and decided not to pay them.
Yeah.
And when you just decide to give them the 2 fingers, there's no real, it's hard to come back from that, like, to be fair. But somebody who's maybe went through a tough time, for one reason or another, you see people and maybe there's a marriage breakup and for one reason or another, there hasn't been payments made. There's a reason behind that. And if you can show that was an issue 2 years ago, or that was an issue last year, things that are very recent are hard to get past, but things where you can show, look, that was an issue last year and I've sort of sorted it out.
Have you had to have those conversations with people who maybe haven't buried their head in the sand, where you're like, Jesus Christ, what are you at? You need to sort this out type of thing?
All the time. There are lenders out there as well that will average your credit score. So maybe one party, his credit is brilliant and the others isn't so great. You've had to turn around and say, look, I've had to take you to this lender and the interest rate's not wonderful. And there's a reason behind it. And the reason behind it is because your credit's not great. You've been messing about, missing cards here and there. Over the last year, you've had 3 or 4 missed payments. It's not great. You need to sort of, you're paying more of an interest because of it. Yeah. You need to get your act together. Like.
Are there certain types of things that people do get caught out on, but not unknowingly? Like, say, for example, they've started up a subscription and they've just forgot to pay it or something? That
I've seen people come onto me.
Realize.
Yeah, I've seen people come onto me and have bank accounts that closed at an old address.
Yeah.
That basically there was a charge and it started off at £2 and now it's £200, right? Yeah. And you've had to sort it out. But it was generally, they're all historical stuff. I've seen people not see things, and family members take debt out in other people's names and stuff like that. That stuff, you know, is more difficult to get round because you have to provide evidence that you've sorted it out. You know, my brother took a credit card out of my name and refused to pay it. Well, how did you deal with it? You know, did you get the police involved? You know, do you want to do that? You know what I mean?
I've seen stuff like this before. It's like, I can't think of your guy's name. He's like this American talk show host, that sort of thing. He helps people, like, gives people financial advice. Do you know what I want to?
Yeah, no.
And you'd have people being like, like kids being like, my parents took a credit card out of my name and they haven't paid it off, and I'm trying to get a mortgage now, and they're like, well, have you went to the police about this? And like, no.
That's difficult because you really have to have the evidence to show that, you know, you've done something about it.
It is mental, like, when you think.
Don't get me wrong.
Situations,
I've seen situations where people just can't get mortgages.
Yeah.
They just can't, because either, you know, their credit's too bad, and it just does what it does. Like, you know, there are times when you have to say no to people, or I can't make this work, or I can't get you as much as what you need to get. You know, you're stretching your income. It's just too much. You know, the lender's just not happy with it. They found something. You know, I've done mortgages for people, and they've tried to hide the fact that they have a credit card from their husband or wife or whatever, and then it always comes out, like, because the credit checking systems are sophisticated enough, and the bank statements, that you have to divulge all this information. I tell people, just be truthful, because it always comes out anyway.
Yeah.
See any relationships ending because of those things? You're like Dr. Phil in the office. He's got 6 credit cards.
Like, funny story. Funny story is that, you know, life insurance comes hand in hand with mortgages.
Yeah.
And years ago, when we used to do life insurance applications, we used to ask people, you know, have you had any STDs in the last couple of years? Like, this was years ago. And I remember saying to a guy, like, you know, any STDs? I think, I was like, yeah, like, I've had them all, like. And his wife was like, you didn't hear he said it in the last 2 years, right?
Yeah.
And this was all like when he was a student, and just like, Jesus, you know, so you hear it all, like, to be fair, and sometimes you have to do a bit of relationship counselling. You know, I've had people coming on, and, you know, he wants to live in a house here and she wants to live in a house there, and they're arguing about out in front of you, and you're like, right, you know, no domestics here in front of me. Like,
find a compromise.
you know, it always seems to come out when they're sitting in front of you. Like,
But and in terms of it, for those who are kind of like around our age, you're maybe thinking of, you know, buying their own home, and you hear it a lot, like people sort of just picking a number out of the air and be like, I'm not going to go looking at a house until I save at least 30 grand. Like, in general, what is the deposit someone would need before they can be serious?
You can get away with a 5% deposit. You know, this myth that you need massive amounts of money, it's not true. But what I would say, think about it like this, right? So you're looking at a house, you've got a 5 or 10% deposit, but ideally you want a 15% deposit because the interest rate is going to get better. What happens if that house goes up in price by the time it takes you to save that deposit?
Yeah.
So you could have been in that house, but because you haven't, and you've decided to hold on for longer and save more money, it's actually cost you money because you didn't get the house. So there's no magical number. You know your own affordability better than anybody, but ultimately there are 95% mortgages, 90% mortgages. You know, there is ownership. You know, circumstances change, so there's no magic number. It's all about you.
What way does co-ownership work? Just for anyone who doesn't know.
So co-ownership is a Northern Ireland based scheme. It's a shared ownership scheme, and some of the lenders will allow you to move on with no deposit. But co-ownership, you can do, for example, 30% co-ownership, 70% mortgage, and then you can buy it out further down the track. It's a tool that some people will use to get on the property ladder, but ultimately you have to buy them out, because if you don't, you pay them a rent for the rest of your days until that's either squared up. The thing about it is that if you buy a house and the house goes up in value, right, they get 30, whatever the percentage share is, they take that off the increase. And so if the house goes up by 10 grand, they owe 30% of it. Well, you have to give them 3 grand back. So, it's a tool that's there. People use it. It can be hard to get a deposit together.
What's for loses value? Do they pay you?
No, they don't actually. And in the current market, we haven't seen a lot of that.
Yeah.
But in the previous market, that happened.
Yeah.
Yeah, and obviously you need to talk to ownership about that, but there's no hard and fast rules. But you ultimately owe them the money.
Yeah.
It's just that some people have waited long enough to get out of it.
And what way it's paying them work? You're essentially renting, like, say, a percentage of your house off them.
Yeah.
So how do you actually physically pay it? You just set up like a direct debit or something to pay them, or what way does that actually work?
You go up every week and you pay them by cash over the counter.
Yeah. You joking?
No.
Seriously?
Yeah, I'm joking.
Yes, this was like.
Can I ask you a question? Right?
Yeah.
How do you pay people? Like, you pay people by direct debit.
Yeah.
All sorts of this.
How do you pay for things?
Stays used to the brown envelope.
Just like no. Everybody just has direct debits these days. Like,
Yeah. Oh, fair enough.
And in terms of like whenever people are putting like deposits for houses down, I think from chatting to people recently who have bought houses, I think the one thing that comes up and bites people in the arse is the payments after that. I know me and you have talked about this, where like you come in and you're like, oh, I'll pay 20% deposit or 15% deposit. You think you're King Dick, and then the next minute you get hit with, you have to buy furniture, there's insurance, so I suppose what are the type of things, because you don't know it until you're in the thick of it, what all else you need to be paying for.
So generally, you think about your standard household bills. So you've got rates in Northern Ireland, right? We don't have water charges. You've got your mortgage, you've got your house insurance, you've got your life insurance. And then people have things like broadband, entertainment packages, stuff like that. But depending on if you're buying an apartment, there's a service charge, there's a management charge, but you should always look into that. See when you're buying, but your solicitor will tell you, look, there's a communal fee to pay to cut the grass out there. It's a couple of £100 a year. But when people are buying houses, do you need a fill of oil? Do you need gas? Do you need to paint it? Do you need furniture? Do you need all those things? What do you need? What does it need? Yeah, it's great. You've just opened the door and you own it. Well, that's when reality hits, because you need to start paying the mortgage, and then you need to start paying all the bills, and then you need to furnish it. Like, you need to buy a lawnmower, you need to buy a hose, you need to buy a ladder, all that kind of stuff that you buy one off.
Mm-hmm. Yeah. The bed was the one for me that nipped and bite me in there. So I walked in and I was like, no, I'm moving out of mom and dad's house in 2 days. With what bed? I was like, good point.
I took mine with me.
Yeah, I think there's so much stuff that people don't understand. And then I suppose, like, in terms of you'd alluded to it there, the fixed term mortgages and stuff. What do you mean by that? Whenever for someone listening now, like, you've got your 2, 3, 5 year fixed terms, and then you've got variable rates as well. So sort of for someone going into that,
the feeling at the minute is interest rates are going to drop, right? So if you go into a long-term fixed rate and interest rates are going to drop, well, that's tying you into something that might cost you money. Mm-hmm. Variable rates have become more popular recently because there's a feeling interest rates are going to go down. So my advice to people at the minute is look at your own risk profile. If it suits you and you can afford it, take a shorter term, because ultimately, it looks like interest rates are going to go down. Yep. And it doesn't suit everybody. Sometimes people like security and know what they're going to pay for 5 years, and that's fine. You ask the questions and see what people's risk profile is. But ultimately, I think at the minute, a 2-year fix is probably a sure bet. Or some people have been doing variable rates more recently.
Yeah, that's risky, isn't it?
That was a wee bit of a gamble.
How high could it go? Like, how big a risk is variable?
So
say your mortgage is like £600 a month.
Well, the sky's the limit. But if the feeling is that it's going down and not up, data from IMF states that IMF came out yesterday and said that interest rates should be 3.5% by the end of 2025. I don't think that's realistic. I think interest rates by the end of 2025, middle of 2026, will probably be around 4%. So, in a rising market, it can go anywhere. It goes, back. You'll often hear your parents talk about in the 80s, mortgages were between 10 and 15%.
Yeah.
You know, they did go that high.
Do you think you could ever see that happening again?
See if they did, you may as well just shut the door. Because to be honest, most people just couldn't cope with it.
What's the jump there? Like, say, just off the top of your head, you're paying a mortgage of 5%, say £1,000 a month. If it goes up to 15, roughly, what's that going to cost you?
Well, double the interest. So on the payment, I don't know, another 400 or 500 quid.
Is that it? That'll be more.
You take the repayment element of it.
Yeah.
Maybe more.
I'll bring it on then. Bring it on.
By the way, none of that has been calculated, so that is all the caveated.
Yeah. So, because one of the questions that one of the people had asked was, at the minute, recommended 2 or 5 year fixed term. Currently, no significant difference in payments. So your recommendation at the minute would probably be
the 5-year rates are cheaper.
Yeah.
Because the banks look. It feels like the banks are trying to tie people in for longer on those rates because they know it's going to be higher. So for the first time ever, 5-year fixed cheaper than a 2-year fixed.
Yeah.
People come to me and say, "Oh, that 2-year fixed that I had was amazing. I wish I'd have done it for 5." Yeah, if you'd have done it for 5 at that time, you'd have ended up swings and roundabouts, and probably you would have paid a hell of a lot more for the first 2 years. So.
It's cheaper now, but in the long run, it's going to benefit you then.
Yeah. And a lot of people are asking them, what happens if I wanted to move, or what happens if I wanted to, say, pack up, move and rent the property that I'm currently in. I suppose this is more for first-time buyers at the minute who are maybe buying their first home and say in 5 years want to go to something bigger.
And keep their existing property.
Yeah.
So you can do a thing called let they buy. So you just ask for consent with your existing lender, and then you go to another mortgage company that allows you to rent out your existing property. You provide evidence of what that rent potentially would be on the property, and if there's a shortfall or if there's a surplus or if it's covering itself, then they won't take it under your affordability. But if there is, and you have to top that mortgage up, then that'll come off your affordability. But you can do that.
Yeah.
There's also a thing called portability, which means you can literally take a mortgage from one house and move it to another. So if you take a 2-year fixed and you're in the middle of that fixed rate mortgage and 4 dogs move on next door and you can't sleep every night and you want to sell the house and move somewhere else, you can do that, and there's no penalty.
You see, is a consent to that if you own the house just under a standard mortgage?
Yeah.
Is that difficult to change? You don't need to own the house for a certain amount of time or anything?
No. Generally 6 months. They probably won't give it to you within 6 months, but it's just it's an application where you just ring the lender and say, look, I'm moving out. I'm going traveling to Australia, or I'm going to do something else.
Because the buy-to-let mortgages, obviously, there's a far bigger deposit in those for 25%.
Well, you need the equity. Yeah, it's a bigger equity chunk on it, and they're generally more expensive.
Yeah.
And is that maybe a frowned upon way of doing it if you're buying it on a standard mortgage and then flipping it after 6 months to about the
I can't confirm or deny that. Like,
He's like, I'll chat to you later on.
yeah, that's a.
Do you have to make a payment like to switch over? Like, so you get consent to rent, you stay on the same mortgage, or are you saying you have to go and get a different mortgage for that property?
So if you're tied under a fixed rate, you're on that fixed rate, and that can't change.
Yeah.
So the lender's not just going to turn around and say, look, we're just going to increase that rate, because you're tied contractually to it.
Yeah.
But at the end of that, then there's a different negotiation and a different conversation. It's lender to lender, like.
Because I remember at the time, whenever we bought ours, we went into, it was just before everything went from like, I think it was sitting at like 2 and a bit before it like jumped up, and we agreed 5. And like, I suppose a couple of months ago, I was sitting kind of laughing because I was hearing about people going for, like, remortgaging their house, and it's like, lad, I'm paying another couple of £100 more, and I was sort of like, well, I'm grand for another 5 years. But then I can almost see people coming to me in another year and being like, my interest rate's like this, and I'm like, oh, dick.
Did you take a 5-year fixed?
Yeah.
Right. Okay. What sort of rate, if you don't mind me asking?
It was, I think I took it was 2.8.
That's not bad.
Yeah.
To be fair,
though, our decision was purely on the affordability side of it. We looked at it and went, we can afford to pay this for the next 5 years.
Some people do that.
On a and and then even this year, like, I went through a period where I was made redundant from my last job, and that last company I worked for just shut down. I was made redundant, and having that sort of reliance that I knew my wife could, pick up the payments and it would be fine, was a massive godsend at that time, because I was like, whereas I think if we'd have hit, I think it was around that time where we'd have probably been like coming up to renegotiating that we'd have took a 2-year deal, and it would have probably been a bit more squeaky bum time.
And this is what I say, you know your own pocket better than anybody else. Yeah. So it's a case of what's your appetite to risk. The thing I would say to you is that lenders will generally allow you to renegotiate your deal, you know, without asking you for your income. So if you had been made redundant and you could have still made the payments, you know, you could have rang a lender and they would have just offered you a deal, and they generally won't ask you about your income.
Yeah. I was only at work for 1 week, so that was fine. I was fine. Like, but yeah, I remember at the time going, oh, like I can see how people can get themselves into them sort of tricky scenarios.
Yeah.
And I suppose one of the, I think, Tommy, you'd alluded to it. So someone's asked, I have 2 years left on my low fixed rate. Should I overpay each month or invest in the property?
Again, attitude towards risk. You want to get your mortgage paid off quicker? Go ahead. You want to get a deposit for another house? It's really down to you, to be honest. But it's probably, you know, to buy another house and it's on a buy to let, your 25% deposit plus your second property stamp duty tax plus your solicitor's costs. Unless you're prepared to save a significant amount of money, you're not going to do that. Like,
yeah. And then one of the big questions that keeps coming up: self-employed.
Mm-hmm.
A lot of people keep saying
that's my favorite.
Yeah, I'm self-employed. I can't get a mortgage unless I have 3 years accounts. I remember saying this to you the other day, and you were like, "Nah." I was quite surprised.
There are lenders that will do 1 year self-employed, but you've got to be able to prove that you've got experience in the sector. So you can't sell bikes and then go into cakes. Do you know what I mean? You know, you've got to be able to prove that you've got some kind of track record. Right. But generally it's 2 years, and most lenders will take 2 years. There are lenders that take 3 years. But if you're self-employed, you know, you've got to have a good accountant. And it depends really. Are you limited company? You know, what are you? You know, people have this misconception that self-employed is much more difficult to get a mortgage. It's not. You know, it's exactly the same principles, but what are you declaring to the taxman?
Yeah.
You know, ultimately, that's what's important. There are lenders that will take the net profit of your business into consideration as well as your salary. So there's different ways to do it. But it's a misconception that people that are self-employed can't get mortgages because they can.
I suppose when you're self-employed, like your income can maybe go up and down a bit more, so people maybe worry about that sort of side of it.
And that's why they take track record and history of it. So it's not just the last 3 months. You know, you've got to provide a tax calculation for the last 2 years potentially.
Yeah. Mm-hmm. So for the likes of those who are, you know, self-employed, for the likes of someone who is a freelance videographer, you know, if they have a year and a half of good solid sort of accounts and under the premise that they've done videography for the past year and a half, that would probably be seen as they would probably have a better chance as someone who's a bit of a jack of all trades. I've done 3 months self-employed selling toasters, and now I'm doing
100%.
Yeah,
100%. Totally agree with you. People that have a track record like that, like the lender's going to ask for your bank statements. They're going to ask, what did you do before it?
Yeah.
You know, somebody who was working for a recording studio or videographing as an employee, then they went out self-employed. Mm-hmm. You know, that's okay.
Yeah.
You know, the lenders are going to work with it.
Yeah.
But there's a misconception that, no, I've got to be 3 years self-employed and, you know, it's impossible. Yeah. No, it's not like it.
I think the narrative I'm getting out of this whole thing, this podcast, is like, a lot of people almost think they know the answers before they even come and speak to someone. That seems to be the main...
like, what people hear, like people come to me and say, like I heard in the hairdressers the other day that you needed a 20% deposit and you needed to be 3 years self-employed. No, the lenders have changed. They're not big bad wolves anymore. You know, there's somebody out there generally for everybody. It's just knowing what lender to go to. For example, you go to your own bank that you've been banking for 20 years. How do you know that that's the right lender for you? You don't. So our job as brokers is to use our experience and shop around the whole market and make sure you're getting the right person. And that's why it's really important to have a really good broker and they build up a relationship with them. And because when your mortgage comes for renewal, they know your situation, you know who they are, they trust you. You know, it's much better that way. But yeah, misconceptions. You know, I've got bad credit, I can't get a mortgage, I need a 20% deposit. I've heard it all, like, you know, and the reality is that most of that's not true.
Is there one that irritates you the most when people come in?
So many. A list. How long have we
There's
got?
probably a list, actually,
Yeah.
to be fair. It's just, you hear this. My granny bought her house for 5,000, in 1980. Yeah, okay. Right. It's changed a lot since then.
Yeah.
Yeah.
Let's sit down and talk about the here and now.
Yeah.
Yeah.
Your granny was probably getting paid like £1 an hour as well.
Yeah, 100%.
Yeah.
Yeah, and it's like, it's changed so much.
Yeah.
But the lenders are not big bad wolves.
Mm-hmm.
I had a question for you just about buying buy-to-lets through a company. What's the benefits of that in comparison to just buying it on your own?
Well, it depends if it's going to take you into the next tax bracket, because that's often what people are looking at. Are they going to go into another tax bracket? Is it going to take them over the threshold? So is it a company? But ultimately, it's all down to everybody's personal situation and circumstances. Some people, they're better off just having it in their own name. Some people that are going to buy 2 or 3, they're better off doing it.
Starting a portfolio.
Yeah, it's your personal situation and your personal circumstance. To be honest, it's what's right for you, what's right for your financial situation. It's more expensive to buy it in a company. You've got accountancy fees, you've got to register a company's house, it's public information, stuff like that. Again, it's really down to your personal circumstance.
But can you claim the tax back or the mortgage payments back as an expense?
So it's more like a revenue, but I'm not an accountant, so I'm not going to give you advice on accountancy stuff. But I believe, right, that it's more tax advantageous.
And how does actually buying the getting your mortgage then, applying for it? Because obviously you're not the company. The company's
So buy-to-lets are based on the rent.
Yeah.
They're not based on the personal circumstances. So as long as you have an income, you should be fine. And then deposit and then the rent will be what the mortgage is. So if the rent's X, the mortgage is, you can borrow Y based on that.
So I suppose the higher the rental income, then the more you can borrow then.
Yeah. And that's why there's a lot of people looking to maximize, do Airbnbs and stuff like that, because those types of properties have a much bigger rental yield than what, the standard, if you're buying a house and you're getting £700 a month rent, if you've got an Airbnb and it's bringing you in much more. So.
And can you buy just a house then off a standard mortgage through a company?
No.
Can you like say, for example, you want to flip a house, but you want to do it through a company? How would that sort of thing work? You wouldn't use it.
Flipping houses is much more difficult than what people think it is.
Yeah.
Because if you take all the fees and costs that are associated with a mortgage, right, and if you take a 2-year fixed, then there's a break clause on it, the early redemption charge, plus generally the person has to own the house for 6 months before you can buy it, because 85% of lenders, they'll say you have to own, the lender will want the person to own that house for 6 months before they sell it. So it's a lot more difficult. You'll find that people are flipping stuff are generally buying cash or using bridging loans and stuff like that.
Yeah.
They're a lot more sophisticated sort of borrowers.
Yeah, I think one more question I just had was, if you do own a house at the moment and you want to maybe take equity out of it, how does that work?
So let's just give an exact example of that. You've bought a house for $100,000, right? And it wasn't in great condition. Original kitchen, you've done the house up, you've increased the value to say 140, right? You've got the income to be able to do that. So you can ask the lender for what's called a further advance. They'll revalue the property and they'll come out and say, well, the property's worth now 140. We'll give you 85% of the value, and then you can take that back out again.
And is that based on the mortgage lenders?
All lenders are different, but sometimes people do it via way remortgage. But it's based on the value plus your income.
Can you get an independent valuer to do that, or does it have to be through the mortgage company?
The mortgage company will all want their.
Yeah, and they'll allow you to bring, or they'll give you back 85% then of
85. Someone will go as far as 90, but generally it's 85.
And that'll put your payments back up then.
Yeah, because you're borrowing more money.
Yeah. Fair.
I think a good place, unless anybody else has any questions.
Question there, it's just one out of my head. Oh fuck!
You need to ask, or you're not going to buy this
I know.
house. This is the time.
Pressure moment, like.
I know what it is now. What do you think of people who are sort of like, just on the topic of buy-to-lets and stuff, people are like, oh, I can't afford to buy a house because people are buying houses and to let them out and doing that sort of thing. Do you think that's, because I feel like you do see that online, people complaining, but is that just there's a house for everyone type of thing? Do you think that is an issue at the minute?
I don't think investors are really driving the prices up that badly. I think the amount of people, there's a massive shortage of accommodation, like NI wide, UK wide probably. And I think that's what the issue is. They're just not building houses fast enough. And, the amount of people have moved back home and things like that. Like, don't get me wrong, a lot of investors are buying the cheaper houses and stuff like that to rent it out. But, is it that much? You can still buy a house for 120 grand. 130, 140 grand in most places in Northern Ireland. Like,
yeah. And I suppose, like, as we sort of wrap this up, is there any advice that you would give now to, say, someone who is, like, like ourselves, maybe 21, 20, just graduated uni?
Are you 21?
No.
I was about to say
I was about to say like ourselves, but then I suppose we're all on the age where we're like about to look into mortgages or have looked into mortgages. I suppose I'll rephrase that more. The person who's coming out of uni, getting into their first job, like what's some practical advice that you can give that person to basically say, in the next couple of years when you go to apply for a mortgage or buy a house, what are some of the practical steps they can take over the next couple of years to make that process a little less complicated? From things like, you talk a lot about, if you bought a coffee every day.
I see something that has become an issue. So people have a Monzo account, they have a standard bank account, and then they have a Revolut, right? And they seem to transfer money back and forward.
Oh no.
Right?
To yourself?
Like flat out. Like they're transferring 10 quid here and then 5 quid and then back round in a circle. The lender wants to see what you're doing with your money. So you end up in a situation where they're going, show me all your bank statements. And bringing all these multiple bank statements plus savings accounts and all this sort of stuff. Like, why did you transfer that tenner right round all those 3 bank accounts like twice in a month? Like, there's no need for it. Yeah. Don't be putting silly things on bank statements. Don't, miss payments in your bank accounts. Think about your bank statements. Bank statements tell a great story about who people are. Like, keep your credit. Your credit is so important, and I wish they actually taught people in school the importance of keeping your credit really clean. Having a no credit history is better than having a terrible credit history. Like, so do that and think about saving and where the best place to save your money is. A lifetime ISA. Think about all that sort of stuff.
Is there any like credit things or people getting credit on things that you'd advise? Like Ross is saying, if someone's just maybe got their first job, was there anything you'd be like, just stay away from that type of thing?
Not really. Don't go mad and go out and like buy a split new car that's a fortune every month. Like, think about where you want to be, because that car is going to really affect your affordability. Like,
we were actually talking about that with Warren, like just younger people now. Car finance is so accessible compared to when we were younger. It wouldn't really have been something you thought about.
So accessible. So, think about it. Think about before you go into that credit agreement, before you go and buy that laptop that's going to cost you 100 quid a month over 12 months or something. Think about it.
Yeah.
Funny, that's one thing. I know a guy who sells cars, but he said, like, more or less anyone could walk into a dealership now and buy a car at 100 grand, but it takes months to buy a house at 100 grand.
Big time, because it's just a totally different type of asset. They just seem to throw them out the door. Like,
but the cars depreciate and the houses sort of hold the value. Doesn't really make sense.
I see a lot of people driving around in nice cars that I'm wondering why.
And in terms of yourself, like, obviously you've grew the business. The business you said has transformed over the past couple of years into what it is now. And looking at your own sort of personal, journey up until now, what's next for you?
Probably bigger presence in social media, and probably develop the brand a bit more across the water, and then go in Scotland and Wales. And I think possibly start up an academy and with more mortgage brokers, get people out of university and take them pretty much from grassroots the whole way up and train them our way. I think that's where it's probably going to go, to be honest. I have aspirations of probably, growing the business significantly. So I hope the market doesn't crash, and I hope interest rates come down and things just become a bit more positive. And, it sort of feels that we're on the edge of something interesting here in Northern Ireland. So just more positivity.
Yep.
To be honest.
Yep. I think one thing that we can take from this podcast, and hopefully anybody listening right now, is that it's super important to obviously put in the practical steps that you're in life at the minute to make sure that you're making things easier for that 25, 26-year-old who is going to go look for a mortgage for the first time. And then as well as that, I think one of the biggest things that we can all take out of this is don't trust the person in the hairdresser. Go and actually take the steps and find out from someone like yourself who actually knows what they're talking about.
Keep your credit clean. Just don't go crazy. Just, if you borrow, pay it back. It's pretty simple. And go and speak to an advisor. Like, if you're 21 and you're buying a house at 25, an advisor's not going to mind you coming in and talking about it and asking the questions.
Yeah.
Like, we're not going to charge you for that. Like, people think, if I go in and talk to that broker, he's going to charge me. They're not.
Yeah.
They're more than happy. They educate people on financial matters because ultimately you're going to come back at some stage and you're going to buy a house. So it's about long-term, relationships with people. But it
costs nothing to reach out. Like, and in terms of it, they're probably inputting them practical steps in motion at like ages 21 or 22 or at any age really. You're probably finding that in 3 years' time, whenever then people come back to you who are actually ready to buy, it's an easier process for you and them.
100%.
Yeah.
100%.
Yeah.
There's a lot of videos on TikTok floating about that people are telling you what to do and go out and buy properties, and they've got £10,000 a month coming in from all this kind of stuff. A lot of that's rubbish. Mm-hmm. Just be yourself, save money, keep your credit clean, and think about you as a person.
Aaron, it's been a pleasure having you on the podcast, and you've definitely opened our eyes in terms of, and I'm hoping anybody listening to this sort of has an idea as well. And I think we've discussed a lot of interesting things. So
I really appreciate you having me on.
No problem.
It's been good crack.
And if anybody wants to reach out to yourself and sort of put them practical steps in, obviously hope they learn something from this, but if they want to reach out to yourself, we'll leave the link in the description. But
just Smart Mortgages.
Smart Mortgages on Instagram, and you do a lot of helpful videos as well, which is obviously great to have for people who are sort of
we're trying to do content every day, and it's a lot of myth busting. Debunking the myths.
Yeah. But no, thank you very much for coming on.
Thank you.
Until next time. Cheerio.
Bye.